Welcome to today's market update. I'm Maya Keynes. With global headlines heating up and markets reacting across asset classes, we're joined by financial expert Eli Sterling to break down what's happening behind the numbers. Eli, let's jump straight in. We've got several geopolitical stories making waves today, from a nuclear deal between the US and UK to Trump pushing for Russian oil sanctions contingent on NATO support. How are these developments playing out in the markets?
Thanks, Maya. These geopolitical moves are definitely influencing investor sentiment. The US-UK nuclear agreement, timed around Trump's visit, aims to boost cross-border energy investment and streamline regulation. Meanwhile, Trump's call for synchronized sanctions on Russian oil reflects his broader strategy of using economic leverage as a diplomatic tool. Investors are watching closely, particularly in energy and defense sectors, where policy alignment can drive capital flows.
Let's shift gears to Asia. There's growing attention on Chinese equities rallying despite signs of a slowing economy. What does this disconnect tell us about market expectations?
Great point. While China's Q3 GDP growth came in below consensus and consumer spending remains muted, the Shanghai Composite and CSI 300 have shown resilience. That's largely driven by selective optimism. Investors betting on targeted stimulus and strong balance sheets among tech leaders like Tencent and Alibaba. Also, ongoing US-China trade talks in Spain are keeping hopes alive for favorable outcomes on issues ranging from tariffs to TikTok regulations.
Turning now to crypto, one of the biggest stories is Bitcoin staying within its historical bull market support band through September. Can you walk us through what that means technically?
Absolutely. The bull market support band refers to a price zone that historically supports upward momentum during cyclical bull runs. In 2017 and 2021, Bitcoin formed an August high, dipped slightly in September, then exploded higher into October. Right now, we're seeing that same pattern emerging, price holding above $58,000 with strong volume backing it. If history repeats, we could see new all-time highs before year-end.
Interesting. Now let's get into some live trading analysis. First up, AVAX/USDT on the daily chart using multiple trend and momentum indicators. What's your read here?
AVAX is showing solid strength. It's hovering just below the 0% Fibonacci retracement level at $31.12, having held firm above the 23.6% zone. The SMA-based buy-hold-sell indicator shows 5 consecutive gold signals, signaling strong buying pressure. Meanwhile, MACD remains bullish, although momentum is starting to cool. My take? Look for a breakout above $31 if volume confirms. Otherwise, expect consolidation between $28 and $31.
And how about XRP/USDT under similar conditions? Is the picture as optimistic?
Not quite. XRP has been drifting lower, stuck in the 38.2% to 50% Fibonacci retracement zone. Although the buy-hold-sell indicator still shows gold signals, the smart trend and zero-lag trend models confirm a downtrend. RSI and stock RSI are both pointing to bearish momentum. Key support sits at $2.88. Break below that, and we might see sellers target the lower band near $2.74.
What about Link USDT? It seems caught between bullish structure and bearish price action.
Exactly. Link presents a mixed bag. On one hand, buy-hold-sell maintains a gold signal, and the long-term SMA structure looks intact. But short-term, price is below the dilemma and trending lower. Money flow index is rising steadily, but hasn't hit overbought territory yet. I'd treat this as a cautious hold. Watch for a close back above $24 to reconfirm bullish control.
Finally, let's check in on BTC/USDT on the 4-hour time frame via the buy-hold-sell strategy. Any actionable insight there?
Yes. Bitcoin continues to flash gold signals across all 5 periods, reinforcing a bullish bias. Both short and long-term SMA lines are trending upward, suggesting underlying strength. That said, gold doesn't always mean go. It often marks a transition phase. I'd recommend waiting for clearer directional confirmation before initiating fresh long positions.
To wrap things up, what should traders and investors keep their eyes on heading into tomorrow?
Keep an eye on the U.S. inflation prints tomorrow morning. They'll heavily influence Fed rate path pricing. Also monitor developments from the Trump-Keir-Starmer meeting, especially any announcements on UK data center investments involving NVIDIA and OpenAI. And in crypto, watch whether Bitcoin breaks above $60,000. That could accelerate alt-season dynamics.
Thank you, Eli. For more real-time updates and exclusive interviews, don't forget to subscribe to our channel. Until next time, I'm Maya Keynes. Stay informed, stay ahead.